All right, folks, back to work. A pretty darn good day today. We're in a bit of a winning streak the last few weeks, aren't we? If I didn't know any better, I would say this trade and stuff's getting kind of easy, but I'll bite my tongue on that one. You know what I mean, right? Now, we have potential for a rug pull tomorrow. I have a beautiful range right now on the S&P and the Nasdaq. You know, if we play our cards right tomorrow morning, we might play both sides of this market, shorten the rug pull going lower, buying the bear trap, buying the dip later on in the morning. I'm going to cover both sides of this tonight. I want to make sure you all have a game plan to make some money on this tomorrow as well. So it's been a fantastic week. Charts look amazing right now. As always, thanks for tuning in and watching my stuff. Enough of the intro, though. Let's go dive in. Let's make some money on what should be a fantastic Thursday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are ready. I've got 4 clues on these charts telling us where I think the money is made tomorrow. The first clue is right here on the hourly chart. I like to use the hourly time frame as a directional filter, and it's pretty easy to see right now these buyers are in full control of momentum. That's our directional bias, our filter for tomorrow. Second clue is over on the calendar for tomorrow. We get some big news tomorrow. Not the biggest of the week, but we get that PPI number coming out tomorrow morning, kind of the cousin of that CPI report we saw on Tuesday. I don't expect the PPI to be as dramatic of a reaction as CPI on Tuesday, but I do expect there to be a bit of volatility around that number at 8:30 Eastern time. So be aware of that tomorrow morning. And also a heads up too, there'll be no video newsletters next week. Next week's the 3rd week of August, and the final little break we'll take as we finish up what has been a fantastic summertime season. So a heads up on that, no videos on the newsletter for next week. But second clue for tomorrow is expecting some volatility around that PPI number tomorrow at 8:30 Eastern time. The third and fourth clues are down on some faster time frames, some tick charts. We don't trade time charts, we trade tick charts in our trade room because tick charts make pattern recognition a whole lot easier. And in case you're tuning in for the first time tonight, welcome aboard. That is the 7,000 tick chart, all the time frames in the upper left-hand corner, and that moving average right there. That's the only indicator we need to find repeatable profits each week. That is the 21 EMA. There's 2 really important clues here on this tick chart. One clue, we are still waiting for that breakout pullback zone we talked about in last night's video. That range we saw from 2 days ago, we pop up. We know the edges of that range is going to be a very key area of support below. I love the idea of buying a bear trap off that breakout pullback zone. And what really kind of leads me to think we might be in store here for a rug pull is the final clue. That is this range right here. Now, remind me again, folks, what do ranges do? Ranges rotate, right? They rotate up, down, up, down. Of course, we use things like triangles, megaphones, some folks might call them. We use things like pendulum swings, right? The amount above, the amount below. And so if we understand that idea, this kind of rotation back and forth, if we understand that we're way high up right after that big move up off that CPI report, like I said earlier, if we play our cards right now, we can play both sides of this, because what's going to happen right now is this market wants to rotate, right, all the way down, doesn't it? So how would I short something? How would I sell during this rug pull? Well, it's actually very simple. I want a very simple pattern we call a technical bull trap. As we're going lower, remember, we're an overall bull market right now. So the first thing is I got to see separation away from this moving average. Separation, like over here, right? Look right there, right? Notice they separate off that moving average. That's what I want to see. That separation means strength going lower. We know where the market wants to go. So before I get down to that pendulum swing area here, I'm looking for a lower low in price, separation off that moving average. I move just above that high, a strong red candle, signal candle, closing firmly, convincingly below that moving average, and that would be a technical bull trap like I teach in the free video course. The key though on this one is we have to get this before we get too low, right? I'm not trying to short something like this down around these key areas of support. Now, once we get down around these lows, yeah, now it's time to start thinking about being a buyer on this. Here's the problem though. As it makes that run going lower, this is going to be very bearish, right? That momentum will feel very strong. So rather than trying to pick the bottom on that, what I'll do is wait for a 2-try bear trap. I'm going to wait for price to pull back once. Bears come in, try twice. See, here's the deal. Once those sellers commit down there, then I know where their stops are. Much easier to wait for them to commit. Then I know where their pain is. If you're stopped out of a short trade, what happens? You buy your way out, right? Now remember, this market now wants to rotate back up again, right? So if we can get that bear trap to trigger, I'm going to take a quick first profit target. We teach this in the free video class. Get that 1-to-1 first target. And then, just like I want that separation off the moving average here, same thing goes as it rotates back higher again. If I see it separate and go higher, again, when I say separation, it's the shallow pullback. It's when it pulls back, it barely misses, like over here, right? Misses it, right? That's what I'm looking for. Higher high in price. Now I can go in, and we call these add-ons, right? These are called add-ons in our trade room. So it's a bear trap, a 2-try bear trap, like we saw over here, right? They run down, the bears once, the bears twice. It's that bear trap, that add-on. And remember, market wants to go where? It wants to rotate all the way back up, roughly about the amount below. So leave that runner. Now, I want to talk about one more variation of this because you'll notice I have that measured move reminder down there. This could really be our biggest winner of the week tomorrow. So let's just say, for example, we make that run going lower, but we don't really get a good bear trap to buy up, or maybe we do. But oftentimes what happens though is they'll make that run going lower. It'll pop up and make another strong run going lower. Now, I'm going to warn you right now, this will feel like a reversal, but remember, the hourly chart is direction, not the tick charts. Now, remind me again, how do range breakouts work? Range breakouts are very simple. The breakout leg is the measuring leg. So if we have the size of the breakout leg, and again, we may or may not get the bear trap down. I'm not sure if we'll get it or not, right? Sometimes we do, sometimes we don't. If it makes another run going lower, we call this the money zone, right? It's underneath that low, down to that measured move. This is the money zone as we kid around in our trade room. And all I'm going to do now is once I know where that money zone is, again, it's below that low and around that measured move, this is where we look for that same pattern once again, right? It's that same, what was it again? A bear trap and an add-on, right? It's a pullback, bears once, higher high, bears twice. Remember, you want higher highs because sellers want to sell high. As it goes higher, more sellers enter the market. That means more stop losses for us to squeeze. And again, that bear trap runs up, and then we look for that separation off that moving average, bear trap into add-on, and we're resuming the overall trend. So remember, whether or not we get that run down, that bear trap back up again, like we saw this afternoon, I'll take that 1-to-1 first target, move that stop up to point of entry, just like we saw this afternoon in the trade room. So watch that breakout leg, look for that measured move, bear trap it, add on, and that could be a huge run as we return back to the overall bullish trend. Now, I want to talk about if we go higher here. Because could I sell it? Can I buy it up there? Maybe I'm wrong, right? Maybe we don't get a rug pull. Maybe this thing keeps on going higher with that PPI number tomorrow morning. I want to cover that in 2 seconds though. Let's pit stop for a second though, because I know most of you guys watching right now, you guys know these patterns. I get so many emails, you guys passing combines, passing challenge accounts, getting paid in these patterns already. But if you're here for the first time right now, this might be a brand new strategy. Don't you worry though, I teach this entire system, the entire strategy in my free video course. In fact, I have a ton of examples of all of these entry patterns. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So what I'll do is I'll drop a link up top here for you, upper right-hand corner, hit that link that popped up right there, take that free trading course because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. It is remarkably simple. More importantly though, let's face it, we make our money by timing good entries. So in that video course, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back, get your P&L back in the green again. Guys, if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, do me a favor, hit that link that popped up there, watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it's completely free for you. And keep in mind too, guys, I'll drop all the important links below this video, the description of this YouTube video. Definitely start first on the free video class. Most folks start making money all on their own, all from that free video course. You're gonna love that. I'll drop that link below. Don't forget too, we trade together every morning, 8 o'clock Eastern time in our live trading room. I'll drop that link below. Come join us there each morning. And if you're on Twitter or X as the kids call it these days, I post a lot of charts and videos and mindset stuff on the X platform. If you're there during the day, give me a follow. Again, all the details you'll need are linked below this video. Help you learn more, help you earn a lot more. So check it out, linked up below here. So where we leave off here right now, we talked about the rug pull going lower, how to sell it on the way down, how to buy it off of that low right now. I like that idea. Sell it as it goes lower with the proper separation, of course, and then buy those bear traps as it runs lower. But what if I'm wrong on this? What if this thing keeps going here? You know, what if we don't get that rug pull for tomorrow? How would I sell it? We talked about this last night on the video. These shorts off the high are a little bit less reliable. So what's the pattern we use to sell off the high here? It's a crown reversal pattern, right? It's a buyer's try once, it's a lower low, it's a buyer's try twice. This is not my favorite trade though for tomorrow. If we don't get that rotation going lower here, this will be a half size trade for me, a quarter size trade for me. It's a lower low in price, move above that high, a strong red candle closing back below that moving average. And then where's the market want to go? Remember, as it rotates lower here, it's that separation off the moving average. It's that lower low in price above that high, right? That same technical bull trap, crown reversal, bull trap pattern. And remember, the amount above, the amount below, that takes us back below now. Now we run it lower. We bear trap down there once, twice, trap those bears in and squeeze those stops back up again. Remember though, when you're picking the top of a market like this, it's got to be half size, quarter size. Do what you want, but that's a lower percentage trade. What is a much more reliable trade is if we don't get that rug pull, if we do wind up running higher here, what's a lot more reliable is to buy a breakout pullback, right? This range right here, if we were to, for example, if we were to jump higher here and start getting some separation off that moving average, that would be a really good clue right there. That'd be a really good clue right there that we're not going to get that rug pull. And if we don't, all we now do is I wait for a pullback off what was resistance, right? Now becomes support off the top of that range. I use that same 2-try bear trap. So pull back, get back below that moving average, look for sellers to short this thing. I like traps. I've never been a big fan of indicators for timing entries, order flow. Ever since all the bots, the algos came into the markets, order flow doesn't work very well anymore. So I rely on traps for entry timing. I like to wait for price to get trapped in. I can use their stops to fuel that move running higher here. What is oftentimes very common on a breakout pullback is we'll see this thing begin to run higher. We'll see it separate off that moving average. It will give us a really sharp correction going lower. It'll feel like a reversal, but all it is a breakout pullback off that previous range. We get our bear trap below that moving average once, twice. Always a higher high, always a higher high. We squeeze those stops. And then again, remember, whenever we see a range breakout, the size of the breakout, right, is the measuring leg. We then know how big that final target will be up overhead. Just like that technique going lower, right? I can use size of the breakout leg for a measured leg. Like I showed you earlier, that same technique applies here, right, as we go higher, right? So we know how big the breakout is. That helps me now find my exit on that measured move. So if I'm wrong about this, and I'm wrong quite a bit, I haven't been recently, but I'm wrong quite a bit here. I don't have a crystal ball on this stuff, right? So if we do make it go higher here, I'm looking for that breakout pullback at some point tomorrow morning. Let's grab the Nasdaq though. The Nasdaq is a little bit different than the S&P. The S&P looks like it might be good here for a rug pull going lower. If not, we'll trade that breakout pullback. Let's grab the Nasdaq though. The Nasdaq is a little bit different here than the S&P. Now, before I dive into the Nasdaq though, if you're enjoying this video right now, please help me grow this channel by hitting that like button. Make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and supporting my videos here tonight. So as always, thank you for the likes, the subs, all the ongoing support. I appreciate you guys tuning in here every evening on these videos. So on the hourly time frame right now, again, remember we use this for direction, right? I don't want to get too far into the weeds here on the hourly time frame. Drill down now to the tick charts, and you're going to see right away that this Nasdaq's a little bit different, right? Because on the S&P, we were above that range trying to rotate back down again. This one's a bit different. They're similar, but they're very different, right? So one clue is there's that previous range. We're still waiting for that breakout pullback. I mean, again, this is definitely where the best money is made, I would imagine here. And I love, by the way, how this range above us, which is more of a bearish range. It's a bearish range right now. The amount above that range, the amount below that range. Look at how perfect that lines up right around the top of that breakout pullback. So a lot of the same stuff we talked about earlier on the S&P can certainly be applied here on the Nasdaq. But again, as with the S&P, I was up top. And so on the Nasdaq, we'd have to go, right? We'd have to go up. We'd have to either get that crown reversal pattern, which again is not my favorite trade here right now, because again, we're pretty bullish overall. It's a lower percentage trade right there. What I like better though what I like a lot better is going up, seeing momentum turn. Once we start seeing momentum turn, we start getting that separation off that moving average. See, when you're trying to pick a top like this in an overall bull market, it's so much easier when momentum turns, right? Rather than trying to get up there and pick that top up there. As we saw today, right? It's difficult to find the top in a bull market like this. So as it runs up, I would much rather have it get whacked back down, get some separation now. Separation is the key here. Get some separation off that moving average, lower low in price, right? Above that high. And then we know now, again, we know that the amount above, the amount below, we know where our targets are on that technical bull trap. You see a lot of examples of those inside our free video class. And then just like we said earlier on the S&P, right? Once we complete that rotation now it's that one higher high, two, now it's that bear trap, right? Running higher, or you know, that bear trap below the moving average and that run going higher here. Or if we don't get, right? For example, if we don't go higher than back lower again, you know, we might see something like this. We might get this nice strong blast going lower here. We might see that 1-2 bear trap down here, get a nice winning trade out of this. Won't be a huge winner, right? Again, 1-to-1 first target, like you learn in the free video class. Move that stop up to our point of entry. It'll be a winning trade, but oftentimes though, they'll hold the underbelly of that range, then make another leg going lower. And this is where, 15 years ago, when I was a newer trader, I would have thought that was a reversal, right? But again, we don't use the tick chart for direction, the tick charts for entries. And I'm telling you right now, once you learn how range breakouts work, the breakout leg, the measuring leg, you'll be like me. You'll hope for that retest. You'll hope for that next leg lower, because now anybody who sells on that breakout pullback, where's their profit target? Their profit target will be at that measured move. So sellers up here become buyers down here. Is that a good place to sell? Please say no. Please, if you watch my videos, you know that's not a good place to be a seller, right? It's a great place for a bear trap. Now, I'm sure there will be a lot of rookies out there that don't watch my videos, right? My videos are a bit too advanced for most rookies. They want indicators. They want easier stuff, right? But we all know that stuff doesn't work, but it takes a few years, sometimes a lot longer than that, to learn those lessons. The bottom line, though, is once we take out that, again, the money zone, right? The money zone, below that low, the measured move. Once we get down to the money zone there, I can be a lot more aggressive on this trade, because now we're way oversold. Now we completed that measured move, get that bear trap once, twice, right? Get that squeeze those stops. And again, in a retest trade like this, right? Run down, retest. In a retest trade like this, you better get ready to add to your winner, because now we're way oversold. We're snapping back higher. Bears are learning another lesson not to chase it lower, and we squeeze this thing going higher. Bear trap into add-on, and we rotate where? Back up into that range, back up overhead. All right, guys? One more thing here too, because I want to make sure, again, I have no crystal ball, right? I know it may seem like that sometimes, but I don't know what tomorrow will bring. For example, sometimes we get a beautiful run down. We'll get that pendulum swing hit. But, for example, sometimes I don't get a bear trap down here. Sometimes we simply don't get a bear trap there, right? Sometimes there's so many buyers down there, it just whoop and runs right back up again. Now, remember this, right? Very important. I can take a small risk for a large amount of reward with a bear trap, right? But if it bounces hard up off that low, now if I get two tries like this, now the risk is here. The reward, it's not good anymore, right? So if it bounces hard up off of that low, my risk reward ratio is way off now, which means I can't expect other traders to do the same thing, which means I won't benefit from the self-fulfilling prophecy. So in this situation, what I'll do is I'll want two tries, but most importantly though, as it pops up off that low, I'm going to now focus on buying underneath prior swings. That way, I can now get that small amount of risk, right? That bigger reward, right? Look how much better that risk reward ratio is. Okay, this is a very small difference, but as you can see though, it makes the trade a whole lot more desirable, allows me to benefit from the self-fulfilling prophecy. And number two, I'll oftentimes draw a trend line off the highs, bring it down around that low. That is a gorgeous, it's a bear trap like I teach in our free video classes, but really any of the entry patterns you guys are learning in the free video course could be a bear trap, could be a failure pattern, it could be a pullback combo, a strength move as it rotates. You could definitely think too, right? Imagine this now, right? Imagine now it rips up, goes higher here, right? Rips up, goes higher here now. We get separation, off that moving average. We know the market now wants to what? It wants to rotate back up again. There's no reason why I can't pile on more right there. Separation, higher high, and the add-on. Boy, if the trading gods are shining down on us tomorrow, we'll get that bear trap, that below, and that add-on. Man, oh man, I'm getting excited just talking about this stuff with you guys here right now. Love that sequence if we can't get the bear trap going lower here. And then as I said earlier on the S&P, right, if I'm wrong about this could easily keep grinding, going higher. It's summertime, it's August. If that number tomorrow morning comes out pretty good, right, this could easily keep on grinding higher here. And again, if we do wind up getting a breakout higher, if we do see this begin to, again, separate off that moving average, if all the pullbacks are not pulling back to that moving average, that separation, again, difficult in that scenario to try to pick that top. I mentioned that earlier on the S&P. My game plan now is go back and look at these prior highs right there. Think about that now as key support. Wait for that pullback. Look for that bear trap off the top of that trading range and keep on running those stops. Keep using that technique of the breakout leg and the measuring leg. A lot of examples of those inside the free video course. So if we do wind up really popping up here, I'm now looking for that nice steep pullback. We'll start using that range as a key area of support here for a breakout pullback. And again, any of the entry patterns you guys are learning, bear traps, pullback combos, right? Add-ons with strength trades, back to retest the high. And again, the breakout leg is the measuring leg. All right, guys, that's the game plan now for tomorrow and some variations in case things get a bit wild. Again, I want to make sure we're ready for this. That way you have the game plan to make some money in case you're not with us, the trade room tomorrow morning. Now, speaking of tomorrow morning, the place to be is in our trade room, 8 o'clock Eastern time. Guys, the easiest way to make consistent money each morning is to learn and trade along every morning at the opening bell. Again, I'll put all the important links below the video tonight, the description of the YouTube video. Start first with that free video course. You're going to love all those trade examples I include. Everyone loves that free video class. Then come join me in the trade room, and we'll do it together every morning, 8 o'clock Eastern time. In the meantime, guys, be well out there. Be nice to each other. Stack some chips for me tomorrow morning in case you're not with us in the morning trade room. And as always, you better be here next time. Adios, amigos. Bye for now.